All right, welcome everybody. Good afternoon. On behalf of the New York Mortgage Bankers Association, President Jeff Bernard, our entire board, and our Affordable Friday co-chairs, Brian Garris and Sherry Eccles, I thank you for joining today's special webinar. We have the infamous Susan Kotner, Faith Moore, and Sandy Becker joining us today. Before we get started, just a few housekeeping notes. If you experience any technical difficulties, please use the chat box to notify us. During today's webinar, all lines are muted except for our presenters. There will be an opportunity to ask questions. Please use the chat box to ask questions, and we'll do our very best to address as many as we can during the Q&A session at the end. We'll be sharing the presentation slides and relevant resources with you after the webinar. We also urge all mortgage professionals to join the National MBA's Mortgage Action Alliance. It's easy, it's free. It's a great way to stay informed on legislative issues that impact the way you do business. I'm happy to turn it over to Sherry to introduce today's awesome speakers. Sherry, it's all you.
Hello and good morning, and thank you everybody for joining. As Brian mentioned, the Mortgage Action Alliance is a great group, and since I didn't advance the slide in time, just wanted to bring to your attention that there is a link that you can go to in order to join, and then I will move forward. Sorry, Brian, about that. So I'm super excited about today's panel, and what we were looking to accomplish today was to we're always trying to emphasize the importance of the work being done by the nonprofit housing agencies out there. And we have folks from 3 of the best in the state, and also 3 of the best humans that I've ever been lucky enough to know and call friends. So I'm super excited that they're here today to talk about work that they're doing to increase access to homeownership for low-income and minority home buyers, so that we can try to get a little more equity out there. And so they have several different things that they're going to be talking about today, and opportunities that we have to partner with them. Now, obviously, they all have their geographic distribution, so I want to make it clear that what they're talking about is representative of things that in a lot of cases are available across the state. And if it's not, it's always something that we can work with our local nonprofits to build out. So, the idea today is to go through different initiatives that they're working on, inspire folks to get engaged and involved, and also to look to build similar things out in their communities if they don't already exist. So with that being said, I'll go ahead and turn it over to Sue Kotner first to talk about a couple of things that they're doing at Affordable Housing Partnership of the Capital District. And Susan, if you could just give everybody, a little bit of information about your background as well. And I'm going to stop sharing my screen so that we can see her as more than a little thumbprint of her little face.
Yeah. Little thumbnails are good. You don't please minimize your screen. I'm Susan Kotner with Affordable Housing Partnership, working in Albany, but serving kind of the greater capital region, and really glad to be here today, and excited that I'll be able to be fact-checked by a lot of my friends who are here attending today. So thanks to all my mortgage partners who are here. So the Affordable Housing Partnership has been around for about 30 something years. And, we've really grown into kind of having a 3-part mission. One of our primary goals is working with you to try to close the racial wealth gap through homeownership. The city of Albany has the distinguished pleasure of being kind of the second worst in the nation in terms of the homeownership rate among people of color. So we really are working very hard to address that gap. We're also working to address climate change by helping our first-time home buyers access energy efficiency programs, thereby making the home that they've just purchased a lot more affordable because their utility bills are more affordable. And the third thing we're doing is really working to rebuild the communities that we're active in, trying to help more families buy in. Again, communities that haven't seen increased investment, and still really suffering from the results of redlining practices from many years ago. So how are we doing those work? As folks on this call who know us well know that we're doing a lot of first-time homebuyer education and one-on-one counseling. And again, I know that all of you are already partnering up with your local HUD-approved housing counseling agencies to help families improve their credit scores, increase their savings so that they qualify for the best loan products that you have to offer. We also are working very hard to bring in down payment assistance resources. One of the programs that we're really excited to be able to offer is through a private foundation that is making funds available to households of color, Black families specifically, to assist them with down payment assistance to buy in the cities that have been historically redlined. So it's working really well. We've had over $500,000 in funds made available to this program. We've helped 60 families who didn't think they had the resources that they need to be able to buy for down payment and closing costs. So it helps. I do really sincerely believe it helps to have a very direct and specific program targeted to Black families, because it helps overcome that perception gap, that perception that they don't have the resources that they need. And here is some assistance to help them buy. The program's nice in that there's no income limits to it, but there are geographic requirements in terms of where they are able to buy. The second program that we're doing to help families purchase in neighborhoods of choice is to rebuild communities that have been disinvested. And we're doing that through our development program, the Albany Community Land Trust, which buys and rehabs existing properties. Again, bringing in state subsidy resources in order to do that. We're actively working on, gut rehabs in neighborhoods that really are strong in many ways. It's easy to dismiss neighborhoods as just being terrible places to be in the ghetto or whatever. But every neighborhood that we work in has a super strong base of existing owners, and we're really trying to build on that. The land trust model helps ensure that the subsidies used to rehab homes remain with that property, and so that the home becomes affordable to that next generation of buyers. No one family can basically cash out, if you will, on the resources that we've pulled together to help repair that home. So it's been a terrific and an impactful program. The third thing, again, that we're doing to help address climate change is really working to connect income eligible families to the resources that New York State has made available through the NYSERDA Empower Plus program, so that in heat days like today, they're living in much cooler homes because they've had insulation added to their attic. They've had air sealing measures and that type of thing, really reducing their energy demand so that they have a much more affordable utility bill. So we're part of something called the Clean Energy Hubs that NYSERDA has established. There's a clean energy hub for every part of New York State. And again, we work in the 8-county capital region, but there is a hub in every community. And I like to encourage mortgage officers to follow up with the first-time buyers that they've been working with after they buy, to connect them to hubs, so that, again, it's just kind of that extension of that relationship that you've really developed with the first-time buyers that you're working with, to continue to offer resources to them so that that house is affordable and in good repair and that type of thing going forward. So we love partnering with our lender partners. We rely on you and your expertise to help coach our families, to help us understand the nuances of the programs that are available, especially, the first-time homebuyer programs. We love to amplify the grant programs that you're making available through your particular loan products targeted to first-time buyers. So again, we really value the partnership, and thanks again to Sherry and Brian for inviting me along today.
Excellent, Susan. That's phenomenal. So just a real quick question for you. The grant for um, homebuyers of color, that's was it Reparative Housing Justice Fund, right?
Correct. Yep. Yep.
Carl Tui. Again, that's a altruistic, so it's foundation essentially. It's not government money coming into the picture. What are the characteristics of that grant? The specifics, is it based on city of Albany or other cities surrounding Albany, and the amount of the grant?
Yep. So he's a huge City of Albany champion. So he's making $10,000 available to Black households to buy within the City of Albany, and $5,000 in the other cities in the capital region that had redlining. So that includes Troy, Schenectady, Watervliet, and Amsterdam. So again, as I mentioned, the funding does not have any kind of income limit. The family needs to be a first-time buyer. And we have imposed a $40,000 asset cap. If the household has access to resources above 40 grand, we ask them to consider not participating in the program so that we can make the money available to the folks that don't have the resources they need to actually get into that first home. So again, it's been a really effective program. I know that Sunny Mae has a great product out there to help address, a special purpose credit program for Black households, and that has been a very difficult program to implement for many, many reasons. But again, having private philanthropy put their dollars and their reputation behind this program has just been a huge win for the capital region. So we're very lucky about that. I think that a way that the housing counseling agencies could potentially partner with the MBA and others is to really put in a pitch to the Attorney General's office to have them work with us collectively on implementing special purpose credit programs that are targeted at, and legally target extra resources to those who've been historically left behind. So I do think that we need to have the Attorney General, step up and make an affirmative statement to that effect. I think that'd be very helpful.
Gotcha. Are you aware of other cities around across New York that are offering some similar programs? Because this is really kind of a neat model, when you think of it. You don't want to leave anything on the table, and I think just having that awareness and directing lenders and loan officers and staff to AHP for additional information about that program. Boy, what a reputation builder right there. You just added in some cases $10,000 to your borrower's ability to fund closing costs and complete the transaction. So that's fantastic. I'm sorry, I cut you off.
Oh, that's anyone can connect with their local HUD-approved housing counseling agency and see what down payment assistance resources they're aware of and could be made available to their borrowers. So that would be the suggested path.
Well, I think that's exactly the best way. You get on the you get on the internet and you search out down payment assistance. It turns quickly into a rabbit hole. Going directly to AHP's website, there's a wonderful page for down payment assistance, which breaks down by location the different options that are available, and then having a conversation or connecting with the staff at AHP helps to refine your understanding of what loan programs could work with, what grant program, and to maximize your ability to take advantage of those things. So that's fantastic. We just checked the question and the chat right now. We don't have anything going on with that. So Susan, outstanding. Thank you very much. And turn it back over to Sherry for the rest of the folks here.
Great, thank you. And so I want to do two things real quick. One, I wanted to acknowledge that we have two of the other Affordable Housing Committee members on the call today, Lisa Atkins and Paul Hurley, and I know they work extensively with Sue at Affordable Housing Partnership. And so, Joe, I don't know if there's a way that we can unmute them, but, I definitely want to have a dialogue in terms of, once everybody's had an opportunity to talk about their programs, to be able to, have a dialogue. So I'd love you guys to be able to join the conversation if you'd like. And so I'm going to turn it over next to Faith Moore. And Faith is Senior Vice President of Operations and Strategy at RUPCO and Executive Director for RDAC. And we're super excited you're here, Faith. I'm going to unshare again so that we can see your face as you talk about.
That picture is there. You can see my face. I'm like, Susan, keep it on, keep it on minimize. But thank you, Sherry, and thank you, Brian. Just thank you, everybody, for giving me the opportunity to share some of the stuff that we do with all of you. And thank you for being on. I was just looking, there's 23 participants on the call, and which is always very exciting to me, because what we do is very exciting. And what I really want to talk about, I want to highlight a couple of the programs. And as Susan mentioned, anybody can reach out to their local HUD-approved housing counselor. All of our staff is HUD-approved. Actually, I'm sitting in the office of one of my new foreclosure counselors who is off taking his HUD certification test as we speak. But a couple of the programs that I want to highlight for you, one that we use all the time is the Affordable Housing Corporation's Acquisition Rehab Grant. So, we do our HUD-approved housing counseling. One thing that we do, everybody comes through our client-facing portal on our website. We do have orientations on a monthly basis for anybody that is looking to purchase a home. So one great thing that came out of the pandemic was learning that in order to do these orientations, we have a much larger response by doing them online, as opposed to people coming in person to do a 1-hour orientation. We have about 100 people every month that attend an orientation that are looking to purchase a home. As we all know, everybody that is on here, where we are at with sale prices right now. We just ran some numbers yesterday, and the median sold price in Ulster County is $430,000. And when we're working with some of these down payment and closing cost products, we're usually bound by assisting people that are making 80% of AMI. And somebody that's making 80% of AMI, to get them into an affordable rental at the median sold price, there's a $180,000 gap right there. So number one reason why I love working with AHC is we have some flexibility on the income levels that we're allowed to serve. So we can serve up to 112% of HUD's low income limit, which is 80%. So we can serve a higher income level of people. And the other great thing with this product is that 51% of it has to go towards rehab. So we are able to get homes that are priced a little bit lower to help the homeowner get into them, and we're managing the construction for them, which is also a really great opportunity. So it's important to work with mortgage brokers that understand these grant products, so that we can continue to put these out there to people. So I love the AHC program. We have partnered with a couple of community land banks to be able to actually marry this grant product along with the homes that they are rehabbing and putting back out there. We partnered both with the Newburgh Community Land Bank and the Kingston City Land Bank. Sorry, I got so excited about talking about our programs, I didn't even really talk about my organizations much. So as Sherry mentioned, I am the Senior Vice President of Operations and Strategy for RUPCO. And we have formed a few affiliations over the years. We formed an affiliation with Orange County Rural Development, RDAC, in 2015, which covers the Orange County area. And then recently in 2023, we formed an affiliation with Rural Sullivan for the Sullivan County area, as well as RUPCO is been for 44 years now, creating homes, supporting people, and improving communities in the Hudson Valley region. Through these affiliations, we've been able to expand what we're doing across the entire region. So we now are working in Orange, Ulster, Sullivan, Greene, Columbia, and now we're doing a couple of projects in Dutchess, as well as next month I'll be doing some stuff in Westchester. So we're really starting to expand our services. So we're really happy with the AHC program. As I mentioned, we've been doing a lot of work with the Newburgh and the Kingston Land Bank on these AHC and creating home buyers. We have also formed an administration contract with the Sullivan County Land Bank, where we're actually administering the land bank in Sullivan County. So we're able to create home ownership opportunities there as well. We recently completed 3 brand new constructions on land bank property that we were able to sell up to a subsidized low rate. I believe the sale price on them was $151,000. That went to 80% AMI homeowners. So products that are able to, and that was a little bit, we had to work with the banks on those products as well, because it cost us $301,000 to build. And that was with the land donated to us from the land bank, and being able to get the product so that the was able to be sold at that rate for the homeowner to continue to stay affordable was another area that we can work on. This is why we can all work together. We have also, I have always been a big fan of Susan's and the work that she has done. I've always looked up to, looked at her as a leader in the industry, and I love what they're doing with the land trusts. We currently have partnered with the Kingston Land Trust to help them create, and I'm also a co-founder of Taproot Community Land Trust, so to create a land trust outside of the city of Kingston. So we're working with that for exactly that same reason, to be able to get dilapidated and blighted properties, rehab them, and sell them to home buyers at an affordable rate, but then keep them affordable, and to be able to start doing education to home buyers about what it looks like to purchase a home with a land trust. And one project that is really near and dear to my heart, one thing that I did not mention, the affiliation with RDAC is RDAC is 41 years old now, and it was founded by the prior executive director for 29 years, Alice Dickinson, who happened to be my mom. And if you would have asked me 12 years ago if I ever thought I'd be working for her, I would have laughed at you. However, I very distinctly remember 15 years ago her doing a presentation in the town of Montgomery board, talking to them about the importance of allowing accessory dwelling unit zoning in the town, and pretty much laughed at her the entire time. And they're like, no, 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 no. And here I am 15 years later, and I'm very proud to say that we're awarded in the pilot program of accessory dwelling units to build 14 accessory dwelling units in Ulster County. And we have just received an additional $11 million, and we will be doing 14 units in Columbia County, an additional 36 units in Ulster County, and 24 units in Orange County, including the town of Montgomery. So we're always looking for ways to be able to assist with that as well. This grant product will allow a homeowner that already owns their home, making 100% of AMI, a grant up to $125,000 to build an accessory dwelling unit on their property. And it could be a basement conversion, an attic conversion, an addition, a freestanding unit, any of those things. But what we are seeing through this pilot program is the costs to actually build are coming in around $175,000 to $180,000. Some of the homeowners have savings, some of them have other access to funds to be able to fill that gap. But when we're dealing with a homeowner who may be on a fixed income or is older and is looking to build this accessory dwelling unit, one, to help create an affordable rental unit, but also supplement their income as well, they're not able to qualify for a standard product. So we're always looking for ways that we can maybe partner with people on products as far as that goes. So those are just basically the 4 programs that I really wanted to highlight today. And I am available for questions, comments, partnerships, anything like that you want to talk about afterwards.
I have a couple questions and thank you so much. So for those who are unfamiliar with AHC, can you just give a little bit of an overview of like how much money is of it, how much money it offers and income levels and all that kind of
Yeah,
stuff?
absolutely. So income limits vary between 80% of AMI up to about 105% AMI of the area that we are bound to serve. When we write our grants to AHC, we are confined to the geographic area that we put into that grant. Currently, right now, we have one that is operating in Orange County, and we just put in a new round for Ulster County, so I expect that to be kicking off very shortly. The funding amounts can go up to $40,000 in Orange County because we are a high limit, a high area. And it also depends on the AMI. If somebody is at that 80% AMI level, we can give them a $40,000 grant. As I mentioned, 51% of that has to go towards rehab. It can all go towards rehab if they need to use it all on rehab, but a minimum of 51% has to go to rehab, and the remaining 49% could go towards acquisition. The higher income level they have, the lower amount of grant that they can receive. But the least amount of grant that they would receive is $25,000. Again, 51% of that would have to go towards rehab. And how we're working and partnering that with the land banks is that the land banks are rehabbing the properties themselves and selling them as finished products, but they are income qualified for our products. So we are able to show AHC the amount of rehab that the land bank has put into the properties, and then that money is going to the land bank to buy down the purchase price of the house because it's still going towards rehab. So it's making the mortgage more affordable for the homeowner because that's what we want. We all know that we don't want anybody spending more than 30% of their income on a mortgage because communities thrive when housing is affordable. So we're trying to keep the housing affordable by doing those type of things. So AHC, I will always say, is probably one of the easiest and best products. We do have a number of other housing home buyer products that we use as well. There's CDBG, there's home. We have been very lucky in the last year and a half. We have received a couple of philanthropic donations to be able to help people purchase their homes. And every one of these grant products come with different requirements and different income levels and different stuff like that. But that's where you leave that to us to be able to have a home buyer that is qualified for this grant and then to work with their loan product to be able to get them into the home.
Awesome. Yeah. And so for those of you who are unfamiliar with AHC, it's a state agency. They get about $25 million a year to assist people, and groups like REPCO and RDAC put in grant requests, as Faith mentioned, and they'll say, we want to help X number of senior homeowners in Ulster County or X number of people, and there'll be income limits or restrictions on who they're doing their outreach to. And so the only way to get access to this money is to work through the nonprofits. They are the grantees. And and so that is definitely who you want to go through. And AHC has a website that lists their grantees if you're looking to see if you've got an organization in your local area, but also just giving them a call and saying, hey, do you participate in AHC grants? I apologize that my phone's ringing. I'm torn between wanting to get up and go over and turn it off. It's my landline, which nobody ever calls these days. So.
I Sherry, if you don't mind, I saw that there is a question in here from Ed. Do you want me, is it okay if I answer that?
Yep.
Okay, so Ed was asking, do I find that the grants are approved to be used with FHA, VA, Fannie and Freddie products? Yes, absolutely. All of our grant products can work with everything. And that was also one of the things, FHA sometimes, as we know, can, have its own set of rules as well. They wanted so with these grant products, they also all are non-interest bearing, non-payment requiring note and mortgages that sit on a property for a period of time. So each of these grant products, some are 5 years, some are 10 years. One of them was even 15 years. And then they, after a certain period of time, they will start to dissolve a little bit at a time. And after that period of time, it goes away. It's then a grant. It's gifted. They don't owe anything back. In the note and mortgage, with AHC is listed as the owner of that note. and FHA needed some language changed in that. So we were able to work with AHC to be able to make that language change so that they can work with the FHA product. But yes, these grant products all work with all of the other with all of those. And right now we're actually seeing that there's quite a few FHA 203K loans that are coming through. So this AHC product, we've also been able to use with that, as opposed to where we normally are managing the construction up to that $40,000 mark. Some of these 203K loans are obviously much higher, $150,000, $200,000, where the grant is going directly to that 203K cost, and then they're managing it. So yes, it can work with all of the products.
Awesome. There's more questions that are popping up. So I'm gonna, let's see, are they liens or deed restrictions, and what impact do they have on the CLTV?
So they're actually lien. So it's a note, it's like a note and mortgage that sits as a second. So that's always the question that we work with you guys on, right? Like, is it, how does it affect that, and to making sure that we get into the right product? Because I know that there are some products that really affect the CLTV, to be able to make sure that we're able to assist with that in the right way. But it does sit as a note mortgage.
And I know they adjusted the link, but that was part of the change they made on FHA, was to lower the dollar amount of what they're actually recording so that it doesn't have a huge impact on the CLTV.
Correct.
Awesome. One note, just in terms of your ADU thing on mortgage products, Freddie Mac actually allows for through their choice renovation, you can finance the building or reno of an ADU and use the qualifying or the income generated to qualify. Not
Yes.
all allow you to use the income to qualify. So for those of you on the phone that don't offer that product, there's some really great things that Freddie allows on their reno that are unique, and it's a great product to have in your little reno toolkit.
Yes. Agreed. And if you want to do any of those products in Columbia, Ulster, or Orange, please reach out to me.
Awesome. Well, thank you so much. I'm now gonna turn the mic over to Sandy Becker. Oh, wait, there's one more question. Hang on, Faith. Let me just see what it is real quick. Oh, he said thank you. Good deal.
Oh, you are so welcome.
So, hi, Sandy. How are you?
Hi.
Thank you so much for joining us.
Well, thank you for having me. And it's certainly a hard act to follow, these two women and their fabulous agencies. I've known both of them a number of years, and it's an honor to even be associated with either of them. So my name is Sandy Becker. I've actually worked like many of you in affordable housing for just under 35 years. And I saw that Ed Negron was actually asking those questions, and I think I've worked with Ed most of those 35 years. Since 1998, I have overseen the HUD housing counseling side of the company. So that's the program that I oversee at Belmont. Belmont Housing Resources, where I work, is a very large housing organization. It's the largest in Western New York. We cover, most of the area we cover is Buffalo, Niagara metropolitan area. We administer the Section 8 Housing Choice Voucher Program here in Western and Erie County. We develop and manage affordable housing complexes. We've done subsidized new builds in the past. We administer rehabilitation programs for municipalities like the city of Buffalo. And then we became a HUD certified counseling agency in 1999, and that's the program that I oversee, as I said. We have a large HUD housing counseling program as well. There's actually 18 of us that are certified housing counselors, including the managers, and we counsel roughly about 1,700 people a year through our counseling services, which include, we do everything, the traditional home ownership. We do foreclosure prevention. reverse mortgages, home maintenance, but we have a large, actually more than half our staff are actually working with renters and helping families stabilize their housing and building their financial capabilities to move out of poverty and move up and out of poverty and build assets and stabilize their futures. So like I said, we do a lot of different things. Some of the things that the counseling program is working on, we really partner a lot with Sunny Mae and the local lenders on their products. Probably the biggest thing in the last year is the state had earmarked DPAL funding, up to $30,000 grants specific to Buffalo's East Side residents. So if you were an East Side resident, this was after, as most of people know, there was a terrible shooting incident in Buffalo's East Side, which is primarily African American, people of color neighborhood. And the state wanted, and this is an area that's often not been a focus of a lot of development or a lot of initiatives. So they're trying to now, meet the community need and create more initiatives on Buffalo's East Side. And the $30,000 grant to help people into home ownership was widely successful because you really need, as Faith and Sue said, you need a large chunk of money. Years ago, grants were just, $5,000, enough to cover maybe a little bit of the down payment and closing costs. That's not sufficient enough to get somebody who's, under 80% of the median into home ownership. So that actually was successful. We, of course, work with all our local lenders who have Federal Home Loan Bank money as well. We look at trying to layer that with local municipal down payment and closing cost grant, because again, you need more money to go into the house to make it more affordable. There needs to be large investments to bridge that gap. The state, the state is also coming out with a new mortgage product that is going to be available for manufactured housing, that is similar to a chattel loan because obviously they don't own the land, but it's going to have the same terms of their normal affordable homeownership product. It's 30 years, all the same, underwriting guidelines. And so I think that's going to get a lot more people into owning their units. Obviously, the park has to be financially stable, and it has to be a decent park that, they're gonna, back that 30-year mortgage on a manufactured house. But I think it's gonna help a lot more people get into housing. We also are working with our local land bank, with AHC, as the other agencies are. What they're doing is, instead of it bringing down the purchase price for it's a land bank, and then there's also a private developer who's working on it. So they're applying the funds to the costs of construction rather than it being a lien that is against the, bringing down the purchase price for the homeowner and it being another note and mortgage on the property. So the purchasers are actually buying it $200,000 less than what it's costing to build. So somehow they're structuring it that way. I believe there is a deed restriction where if they do have to resell it, they have to sell it to somebody under the income limits. But I don't know the specifics how they're working that, but I do know that it's not going to be like a traditional subsidy where you're dealing with, is the house appraising for that with the lien against it from the subsidy and, what they need to get the mortgage in. So I thought that was a creative way of trying to help people get into home ownership. it's still tough because, you know, even building a house 450, even if you're giving them 200,000 or buying down the construction costs in Buffalo, yes, it sounds like a great deal, a new house for 250, but that's still really tough to, you know, get people to qualify for. So it's still, you know, that's why they're, you know, relying on us to work with the home buyers and try to tee as many folks up who can purchase these houses and fit into that window of where they need to be and still be mortgageable. We also are going to be doing some subsidized new builds around the corner. And in Buffalo, there hasn't been any subsidized new builds in probably, I think, over a decade. So this is like the first time it's been done in a long time. And it's so badly needed, you know, to create more homeownership opportunities in the city. We also applied on our own for home funds and were awarded home funds to provide up to $30,000 in down payment and closing cost assistance. But again, they have to be with the home funds, they have to be under 80% of the median. But again, that big chunk is what can make the difference in this area to get somebody into home ownership. It's still not easy, but it's at least doable. We don't have a lack of interest we have the same amount of volume as we always had as far as people interested in purchasing a home and coming to our classes and all that. It's just how many people can actually purchase a house given the market right now. We also, probably for about 20 years, we've been running our own Match Savers program for down payment and closing cost assistance. It used to be federally funded, but when the Department of Health and Human Services ended the AFI program, we asked our local United Way if they could continue to fund it. It's not at the same level we used to do, but if for every $1,000 someone saves, they get $3,000 to help them towards their down payment and closing costs. And it's funded by the United Way, and we help about one person a month, you know, purchase a house and get a little extra in closing costs. And then again, we try to layer this with whatever else is in our community. Because obviously $4,000 doesn't do it, but if you're layering it with everything else, you know, it helps. And like I said, actually about half of our programming is really helping a lot of low income or moderate income renters get into stable rental housing so they can start to save, so they can start to ensure that their kids are going to school regularly, trying to build on that, what they call 2-generation principle, that if we're helping the parents, we're helping the kids also in the household. And we have that funded through United Way, and there's a Seymour Foundation that funds that. We also work with a Section 8 program called Family Self-Sufficiency. A lot of the folks in that have unstable housing because they're leaving a domestic violence situation. They're in jeopardy of losing their kids, and we're working with them to try to stabilize their housing. Then we work with them on financial coaching and saving for the future. And then eventually we hope, you know, asset building. We also work with pregnant women who are having housing instability issues. We have a very high premature birth rate in Buffalo. So this was another United Way initiative that we help stabilize their housing, get them into housing. We have a little bit of money, and then we also administer the FEMA program here in Erie County. So we try to layer what resources we can to help get them into housing and stabilize their housing, to hope that they get a full term birth, and the baby is born healthy. So you know, there's housing counseling agency pretty much in every part of the state. So if there's a lot of folks from mortgage companies and banks in the area, there's always somebody that will help, work with your clients. Any questions?
I do have a question. So I'm curious about for the folks that might not be aware on the call about the Federal Home Loan Bank program you mentioned that you work on, and I know that a lot of nonprofits across the state work with that. So can you tell us a little bit about that?
Sure. I know Sue is probably saying like, oh gosh, it used to be so great. It's not as great as it used to be. We used to have a match savers program that was funded by the Federal Home Loan Bank of New York. We'd help our buyers, our low income buyers save, and then they would match it and they would get the grant. But right now you have to be a participating lender. You have to join the Federal Home Loan Bank of New York, and there's a fee for that. I think it's like $45,000. Sue could probably know more about that. So you have to be a participating lender, and then you get so many slots. Each lender who's participating gets so many slots to help with down payment and closing costs assistance. And now it's first come, first serve. So they usually get it their slots, a couple times a year, usually in the spring. And then, the person has to be bankable. They have to have a contract in most cases, and then qualify for the grant. They do try to, earmark people that they're working with, as best as they can, but then they hope that if there's additional money left over, there'll be another round of slots available to the participating lenders. But it is, I know it's expensive to join, but it definitely is the thing that, it traditionally has got a lot of, and they go by mortgage revenue bonds, so it's not, and they're actually, I think, even raising it higher. You don't have to be under 80%. So it's really helping a lot of moderate income people purchase houses, not necessarily, very low income people.
And the dollar amount of the grant?
Is it up to 15, Sue? Each lender structures it how they want to.
I got you.
But
Okay.
I think it's up to, so if they want their slots to go further, they can lower the amount that they're giving or give the full amount.
Got it. I mean, one of the things that has always impressed me about you guys is you're so innovative in terms of the way that you partner with other nonprofits and you partner with school districts and all kind. You're always trying to find ways to be active in the community, and all of these groups, they do home buyer counseling and they connect people to resources. One of the things we used to say all the time when I was at Sunny May was, Bill Teague had created this flyer that said, "Show me the money." And it was basically, if you're looking for resources for your borrowers, the place to go is your local nonprofit, because they know any municipal grants, any private foundation funding, all loan programs. You guys really know the way, and you also know how to layer it, what's allowable. So it really is a game changer to partner with you. And so many folks that but for your involvement would not be in these houses. But in addition to that, you do foreclosure prevention, you do real estate development in a lot of cases, and then all of these other community initiatives like working with pregnant mothers and things like that. So, again, everything that we do to partner with these groups helps support them, supporting their seminars and their training classes, and sponsoring their events is also really important because they provide such a valuable service in our community. So Brian, I think you have a question, and I also wanted to ask Faith and Susan if they could turn their cameras back on so we can ask a couple questions of the panel. And then also just a reminder, Paul and Lisa, I think your microphones are activated now if you guys have any questions or want to jump in as well. There you are.
Awesome. Well,
Right.
listen, there's a lot of nuggets of awesomeness, just wonderful pieces of information that are beneficial as we go throughout our journey to help homeowners get into homes. But the one thing that I'm hearing is like there's an infrastructure of help available. There's an infrastructure of grant funds, assistance, and those things are set up. And we need to know about them, and we need to share that information and inspire home ownership. I mean, that's really at the core of this. There's a lot of folks out there that have self-selected out of home ownership. I can't do this, it's too expensive. And it's not a victim status, but it's tough. It's definitely tough. And to have that inspiration of home ownership, and knowing that you're backed by assistance, backed by an infrastructure of folks that are dedicated their careers to helping you get into that home and staying in the home is precious. I mean, is housing too expensive today? I mean, are homes overpriced? I don't know. I don't think so. If, for example, and I won't drone on, I promise, but if you went back 50 years ago, right, and instead of buying a home in dollars, you bought it in gold coins 50 years ago, that number of gold coins is the same number it would take to buy a house today. That's interesting, right? Is housing is too expensive? Well, not compared to an asset. It depends on what you compare it to, what asset class you compare it to. Now, dollars, obviously, the things have gotten more expensive, right? I don't see, based on the housing relationship to other asset classes, I don't see a correction that creates affordability, right? At least not in the short term. Maybe incomes keep increasing, and that the gap between affordability and income decreases over time. But in the meantime, there's assistance. And I think having these discussions are huge to illuminate that and inspire some home ownership. So I'll get off my soapbox and turn it back over to you guys.
So I think, Paul, did you have a question? You keep seeing your little box light up.
No, I'm good.
Okay, hi. So I have a question for all the panelists, and that is, how do you find the folks that you're helping? Like, how are you doing your outreach, and how are you finding the people that you're working with?
So I can say most of our outreach is through our fantastic marketing and branding manager that we excuse me, that keeps our website up to date and social media. However, the number one way people are finding us is word of mouth. Because one home buyer buys a home and they get this grant and they're telling them, hey, call Repco, they can give you $50,000, or they just gave me $50,000. I mean, and that really spreads. And the same even with our, you know, you mentioned foreclosure services. We have a very robust foreclosure prevention program, and we've been doing foreclosure prevention since 2008. And we still currently right now to have 200 active people that are struggling with foreclosure, but we have never advertised it. And because New York State has mandatory settlement conferences, it's really the court-appointed referees that are referring us, and people that are coming to us, and word of mouth. We're same exact thing. So.
Yeah, I'll say word of mouth is key to our program as well, and active social media. But also our lender partners refer people, which we really appreciate. So it's good.
Awesome.
I think one thing we've done in the last year that in addition to the normal fairs that you go to and whatnot, community fairs, we have a Black-owned real estate company in Buffalo, and we've been partnering with them, and they've been doing community presentations, partnering with their churches and that are in the African-American community, and we've been piggybacking with them. So we almost gotta like stop doing outreach because we have like more clients than we can actually handle, who are more in the beginning stages of buying a house. But that's been a successful partnership.
Got it. Well, I know, being trusted members of the community, you do get a lot of grassroots, you know, support that way. And so again, as lenders, if we are trying to help the people that you're trying to help, you know, it's just a matter of trying to figure out how do we get access to them or get our messaging and our words out and things like that. So, I think I agree with you, partnering with specific realtors and other referral partners that are working specifically with the people that we're trying to help as well is a good way to do it. But you guys, we've always found that you guys are great referral partners backwards as well. So we can send people to you, but you're obviously also sending a lot of folks to us. So I guess what I would like to ask next, and I just want to double check that there's not, let's see here. Do you all still have the need for lenders to provide a letter of support for your state and federal grant submissions? Secondly, what other support can lenders provide to assist your organizations for program continuation? You
Are
want
we
to
going to say charitable donations?
We do appreciate those for sure.
I know it really, and I usually say this when we do get some funding from our local lenders, foundations, and we really wouldn't be able to operate these programs without foundation funding. We really don't get hardly anything from HUD to, even though we're, say your HUD Housing Counseling Agency, and people have the expectation that HUD's giving you all this money to provide this in the community, and that's not the case. And a lot of municipalities are still getting the same amount in block grant and home funds. They haven't upped their funding to counseling agencies. So why you hear us talking about doing 10 different things is we're trying to stay alive, and the only way we're able to is to wear all these different hats and try to administer all these programs to not just help more people, but to also be able to pay the bills. So
Remain viable.
yeah.
I will say that, not all, for the folks that participate in the Federal Home Loan Bank's Homebuyer Dream Program, not all of those lenders require or ask that their families go through a HUD Housing Counseling Agency. They just get an online certificate, and that meets the program requirements. And it would be hugely helpful to help support your local housing agency if you did ask them to at least meet one-on-one with a housing agency so that we could receive the $500 that Federal Home Loan Bank permits to go to that counseling agency. Because that's a huge component of our pre-purchase program. And that's been declining over time. And I understand that lenders don't feel like their borrowers need to have that one-on-one counseling, but it's always good to make sure that they're familiar with the resources available to them after they buy. So it's just a very good general kind of financial, session that people have, and it never hurts. People are never telling us, I'm so sorry I wasted my time talking to a housing advisor. They have never said that. And it is huge help to us to be able to have that $500 come in. So that's a pitch that we would make to folks participating in the Federal Home Loan Bank programs.
Yeah, and I definitely think that we all as a lending community need to continue to educate our peers about the value of housing counseling. There's a lot of data to show now that borrowers are upwards of 35-40% more likely to be successful in their homeownership experience if they've gone through pre-purchase counseling ahead of time. And that's not just going through an online education, but the actual in-person counseling component that really makes a difference in terms of budgeting and expectations. And then also just establishing that relationship so that if they do find themselves in a situation after closing, they know where to go. So next question would be, I know that there's HOP just got codified. It didn't look like there was a dollar amount established with it. Which basically, it exists, but without a set standard of funding that still makes it a political football every year for the budget process. I'm curious, we are looking to do an initiative in the fall where we want to do some training via these webinars on how to meet with your representatives in an interdistrict meeting, providing them with talking points and information about the things that we're supportive of, like financial literacy education in high schools and different things like that. Is there anything at the legislative level or even regulatory, if we were to advocate for something at HCR or whatever, that you guys think would be important for us to include in that slate?
Yeah, so that HOP funding is huge. So for those who aren't as familiar, that's the homeowner protection program, and is basically the foreclosure prevention work that we do at no cost to the consumer, to the family looking to save their home and figure out a reasonable workout situation so that we don't go through a foreclosure. So that is every year an ask that we take to our elected officials to remind them of the importance of the of that program. So that would be greatly appreciated.
Yeah, agreed with that. And my foreclosure prevention counselor that's been with us running the HOP program, he's now always looking, a lot of the clients that he's serving are seniors who no longer have a mortgage, but are going into foreclosure because they're not able to pay their taxes. And we can't necessarily have the same workout options. Municipalities will let you do a payment agreement, but if there's no money to do a payment agreement, it's so he's hoping that there could be some kind of funding, like there used to be a program MAP or some other things where we can help pay off the back taxes if we can show that they can continue paying the current taxes. So I think I would like to, we're trying to do some advocacy and stuff around that, but I think that would be something great to add to that as well. And of course, all of our other programs that we offer, we used to get 18% between program delivery and admin, and now we're seeing it's more like 10%. So, which is, we still have to pay salary and health insurance benefits and all this other stuff. So, I always throw that in there too.
Yeah.
We have a
Same.
question from Jody. She was hoping to have you guys restate what partnership the agencies have with United Way.
So I was probably, or am I on mute? You can hear me?
No,
Okay.
we can hear you.
Yep.
Okay. I had mentioned the United Way. So we receive direct funding from the United Way through their annual application process. But then because we had a great relationship with the United Way, a lot of times United Way National comes out with a an idea that they would like to see their partner agencies develop, or they have identified a funder. So like the Seymour Foundation has partnered with a number of United Ways across the country to help families with school-age children stabilize their housing. So the United Way, obviously knowing our work, contacted us to be their partner agency with that program, as they did also with what we call the Go Buffalo Mom program that helps the pregnant women. Now we're working on another initiative with them. So I think it was just our active involvement with them. They had different coalitions that we were part of, and we were very active in those coalitions that they headed up. So again, we ingrained ourselves in their organization and with their leaders. So they always thought of us as the go-to when there was something that they were presented with. I don't know if that answers your question.
Yeah, that's excellent. And also Ed had mentioned interest in obtaining contact information for our presenters. I think that would be wonderful. We can send that out to the attendees, and definitely encourage you, anybody on the call, to reach out directly to the folks on the webinar today with your questions. And we're a little bit over. We have 4 minutes past 1, so I think without any other comments, did Paula and anybody else have topics they want to get out? No? Well, on that note, I just really, Sandy, Faith, and Susan, just really appreciate you taking time to be with us today and share these nuggets of awesomeness. This information's quite valuable out in the field and in general in this ecosystem that we share. So please connect with our speakers directly. We'll have the contact information sent out to the attendees today. I also want to draw your attention to our upcoming convention. It's going to be awesome. Like New York Mortgage Bankers, we're just awesome no matter what. But when we all get together at a convention, it's hard to beat. So that is September 5th and 6th, coming up pretty soon. Register now. You've got a couple of weeks to get in under the promo price for that. So pay attention to your email and see if you can get registered for that awesome event. Today's webinar will be posted on our YouTube channel, New York Mortgage Bankers Association. So you can search that out to view this and other recent educational webinars we've presented for members and guests. Check that out. It's going to be awesome. And please join us again for our next Affordable Friday webinar. We love doing these things and we love your attendance. So thank you very much.